So it's my pleasure to welcome on the Q&A number 2 for 360Metafinance. First of all, Hans-Jürgen Schmitz from Mangrove Capital Partner. You may know him from deals like Skype, like Wix, but he will tell us how many he's doing. It's a lot, over 22 years. We have Thomas Campion, who is a specialist for all cryptocurrency and this type of technology at PwC Luxembourg. And we have Laurent Pullings, who is the CIO of the Luxembourg Stock Exchange. So thank you for taking the time to exchange with us. For those who are not familiar with the system, so at the 360Metafinance conference, the presentations are posted online. They are recorded, and you can find them on the website. And the Q&A is done live like this. It is recorded. And of course, you are free to ask your questions at the end of the panel. I have prepared 3 main themes for tonight. First is going to be the disruption, then the impact of new technologies on finance, and then the future of finance. So let's jump into it. I'll start with Laurent. Regarding disruption, which cybersecurity issues are you focusing on at the Luxembourg Stock Exchange?
Well, good evening, everyone, and thank you for that question. So indeed, as a stock exchange, we need to make sure that the market is kept safe and is open in any situation. Like a lot of companies, and especially financial companies, we have observed increase in the number of cyber attacks in the last months, related also to the international situation, of course. We need to make sure that the market that we are managing and the trading platform are kept open all the time. So it implies a huge shift in terms of cybersecurity policy. In the past, most of the IT department were building wall around their environment to protect, like a castle, in fact, to protect invader or intruder to enter into the system. That does not work anymore. Why? Because today, our own assets are everywhere. The people, the employees, are working from any place. Our systems are in the cloud, on-premise, whatever, from any place. And intruders are also everywhere. And you need to consider that you might have intruders inside your own castle. So we really need to shift the paradigm concerning cybersecurity and to move from a system where you try to protect your border to a system where you are able to detect strange behavior. So my assumption is that one day someone will enter in my system. For sure, it's going to happen one day. Might be because he's more smart than my team. Might be that because one of the employees is giving, by phishing mechanism or whatever is, giving the credential to access. One day, someone will enter. So we need to make sure that if some behavior that are not normal are detected, we are able to act and to act fast. Today, if someone is entering in your system, you have to consider that less than 1 hour after, your system is completely corrupt. It's completely under the control of the invader. They have that capacity. So you need to be able to isolate any suspect behavior in less than that 1 hour. Of course, it requires a lot of automation, a lot of standardization of the way that you are able to detect, of course, those behaviors that are different. And that requires also the help of new technical solutions like artificial intelligence to be able to say that behavior is not normal. I have one customer that is deleting 1,000 files in 10 seconds. It's probably not someone that is doing his job, in fact. So that is a strange behavior. You need to isolate that behavior. So it requires a lot of shifting the way that you need to interact to make sure that you can keep the system safe and protect it from also bad information or information that would be stolen.
And if we go to the end of this logic, we've seen recently in Luxembourg a lot of ransomware successful attacks, with some companies shutting down almost for 4 or 5 weeks. Is this a scenario you're also studying, and how could you react fast to such a scenario?
Yeah. So most of the scenario, at least the scenario where you can get the info, because most of the people when they're attacked, they don't share that information quite easily. But still, most of the scenario of those attacks are always based on the same. It's a phishing mechanism where basically someone has been able to enter into your system, or one employee, that has been downloading a file that should not have been downloaded. So the basic protection were not taken. So one thing that is really important is you need to make sure that your employee understand what they are doing and understand what is not a normal mail that they will receive. Like I'm always saying, when it's too beautiful to be true, basically it's not true. So be really careful with all that kind of thing. So talking like evangelization, repeating always the same message to your employees, it's really important. Then it's early detection. So it's really to be able to detect what is happening, and then you need, of course, to build resilience mechanism where in any situation you will be able to restore the service. So that means that you need to protect your data. Ransomware, it's quite easy. It's someone that is just encrypting your data. At the end, you cannot access it anymore. Okay? You need to make a copy of your data that you can ensure will never be encrypted by that ransomware, and to be able to then reinstall your system.
Okay. So still in the disruption theme, Thomas, a few years ago, 5, 6 years ago, we heard everywhere how blockchain and AI was going to change finance for sure. Now many years have gone by. What is really impacting finance today? What is real compared to what was buzzwords and just a big announcement?
Obviously, we would need more than 45 minutes, to answer that. But just to come back on your first comment, yes, we've been hearing a lot about blockchain, the impact of blockchain, the fact that blockchain will solve all the issues in the world a while back. But the thing is that blockchain has not really changed a lot, in terms of underlying technology, what it is meant to achieve. But it's, being right at the wrong time is being wrong. And this is what happened with blockchain, probably. In a couple of years, when we will be looking back, we will be realizing that, the design of blockchain, what it was meant to achieve, so by the way, initially, peer-to-peer cash transfer, pure transactional machine, trustless, value transfer, it was doing it extremely well, and it keeps doing it extremely well 13 years after, 14 years after. No downtime, no hack, by the way, but that's a misconception. Blockchain has never been hacked. So service providers using blockchain have been hacked, but that's two different things. Banks are hacked as well. They are not using blockchain, not all. And we'll look back and we'll realize that, from a design perspective, it's still working like a Swiss clock. So the point is that it was probably a little bit too transformative, too early. Now, in terms of how it impacts finance, as I was saying, so blockchain is all about transaction and transfer of value of any type. So given that, it really impacts finance broadly. It's pretty pervasive. No, obviously there's a maturity spectrum in terms of country development in the space. We can clearly not compare European countries to the US or Asia. We have to recognize that we're lagging. But we need to take action. That's not just complaining about it, but there's a level of maturity which is varying across the world. Now, if we have to stick to Luxembourg, I'd say that you probably have three main verticals, which are banking, asset management, and capital market. In the banking space, it's all about the development that you see in the DeFi space. if you have to have the mirroring in the blockchain and crypto. So DeFi is for decentralized finance. It's the provision of financial services without financial intermediaries. You may have heard about staking, lending, borrowing of crypto, stable coins. All of that is mimicking somehow traditional financial services, but without financial intermediaries. It's not perfect, not at all. I mean, there's many stories, bad stories around DeFi, but the point is that it's doing exactly what a bank is doing. It's doing it 24/7 at the fraction of the cost, and it's 100% inclusive. Everybody in the world who has a crypto wallet and some crypto can start having a loan. You may have heard that nowadays you can start engaging into contracting a loan which is backed by NFTs. A few years ago, it would have been science fiction, but it works. In asset management, I mean, you probably have seen that we issued a couple of months ago our first crypto asset management report. Crypto asset management, so crypto as a new asset class, is a real question mark. That's the first time in the crypto story so far that we have an inflationist episode. So we will see now if the value proposition, if we talk briefly about Bitcoin, the fact that it was deflationary, that it was a store of value, if it materialized or not. But the point is that we have 20,000 crypto assets in the space. So it's not only about Bitcoin. There's, 20,000, yeah. So the value proposition is different across, there is subsets. We don't have time to tackle taxonomy today, sorry, but there's a variety of crypto assets. Not all are worth it. Probably 90% are not worth it, but 10% of 20,000, it's still many fishes, right? So crypto asset management, the whole asset management value chain is being transformed because as we were discussing just before the panel, the custody element of crypto asset is super specific. You do not custody in the crypto asset the same way that you do the custody of traditional assets. You may have heard that you lose your key, you lose your crypto. That's the famous sentence that you keep hearing. So it will transform the custody model in Luxembourg. We see now that thanks to some clarity from the CSSF, AIFM in Luxembourg can start having an extension of license, which allow them to manage AIF investing up to 100% of their NAV into crypto. That's unique almost in the world, but trust me, very few people are aware of that outside of Luxembourg. I spent 10 days in the US conferencing across May. Nobody had a clue. I was presenting with the Alfie. The audience is not aware of that, so we should probably think about how we promote that outside of Luxembourg. And then capital market, and then comes the whole topic of tokenization. I mean, assets tokenization, how we bridge between crypto and financial instrument. It's probably where, for a country like Lux, the big deal is. So we are mature on that. We have player in Lux. Primary issuance is working well. We can tokenize equity, tokenize bond, tokenize any kind of financial instrument. We have player in Lux without naming them. And we also, since a few weeks, have the missing piece, which is how we make sure that we have the DLT market infrastructure regulatory framework available in Europe, which is the PRR, so the pilot regime regulation, which set the scene somehow in the regulatory framework to develop secondary market for security token. Because at the moment, it's good to tokenize whatever you want, but if at the end of the day, there's no liquidity, and there's limited to transferability, this is just halfway. So these are really the three pillars that I have in mind, which is already a lot for a country like Luxembourg. And by design, crypto is global, so you retrieve that in other countries globally. So this is how it impact finance, I'd say.
Yeah, so I hear all the opportunities you envision for Luxembourg. And the beauty of such a panel is that we have several world meeting here. And I'm really curious first to hear about Hans-Jürgen's comment on what you just said. When I see him react, I saw you react when he said 20,000, coins, basically, or when he said you can back a loan with some NFTs. How do you react to this as a venture capital expert?
Well, at first I have to have my own NFTs and my own cryptocurrencies to live it, which, in full disclosure, I don't have
yet.
And that exemplifies to some extent two worlds. I'm the old world. My son is not. The new generation, whatever you call them, the millennials or the Gen Zs, they will have a complete different perspective on finance and financial services at large. And this may take another 10 years until it becomes mainstream, and many of the things that are currently being tried and tested that you mentioned may not actually see main stage in the next 5 years, but they will for sure be in the next 10 years mainstream. And when we talk about disruption more broadly, you alluded to it, Mangrove does not have a specialty in fintech. Since we talk about finance, I associate that with fintech. 10 years ago, or not even, we sat down and we thought about the next 10 years. And we said, well, what are the theses that we want to pursue from an investment perspective? And we come to decide that fintech is not one of them, which may sound counterintuitive today, and it probably is to some extent. But at one point in time, you make your bed, you define your strategy, and you have to pursue that to a certain point. Now, why did we think this 10 years ago? Fintech was probably on the verge, and let's say 10 years ago, maybe 14, just post the financial crisis. The banks went to banks went to a nuclear winter. They couldn't do anything anymore. They had to fight for survival, many of them, and the whole industry at large was obviously heavily traumatized by what was happening. At the same time, the first early, small plans of fintech started growing, and then if you fast forward 7, 8 years later, fintech became a real force to reckon with. Partially because there was no competition. They weren't competing with the banks or the big financial institutions because they didn't act. And this could have cost the banks their existence. It didn't, funny enough. And that was one of the reasons why we said we will not bank exclusively or largely on fintech, because the competitor on the other side is much stronger than fintechs may believe. The trust that the large part of the population has in financial institutions, their brands, nonetheless is pretty strong. It's their money, it's your money that you're entrusting. You can spend 50 euros on Zalando back in the days when this was a crazy idea, and you wouldn't care if you lose 50 euros because we weren't sure whether you trusted Zalando at that stage. But you would not do the same with your hard-earned savings. If you had the choice, you would not give it to some robo-advisor had it existed at the time. Now, this has changed in the last 10 years. And the banks are well advised, and I think they do have recognized that they have a role to play. They can play that card of trust still. And they can play another card, which back in the days, again, was one of those reasons why we didn't believe necessarily in the disruption of fintech in such a relatively short period of time of 10 years, is fintechs are really good on the on the front end. They give you great apps, they give you a great user experience. They had no clue on the back end. I remember a conversation we had in 2015 with Paul Achleitner, who at the time was the supervisory board chairman of Deutsche Bank, who was facing this room of startups and said, "You guys have no idea, and girls. You can do the most beautiful front end. If you do that in fintech, we, Deutsche Bank, are the ones who really know how business is run. The processes, the regulatory knowledge that we have, and of course the trust." And he was right. Because if you think of some of the stories that went through the press, probably in 16, 17, 18, whether it's around Revolut, whether it's around N26, the biggest challenges they had was regulatory. They couldn't catch up with what was requested from them once they became a bank. Now, this has not taken them more than 5 years to solve, or at least to live up to some extent. So they become real competitors to the traditional financial services establishment. Last point was, and this is still in favor of the banks, fintechs are still, they can't survive without venture capital money. Fintechs have not largely, broadly, demonstrated that they can run a sustainable business. And I'm making probably too broad of a statement. It has to be sub-segmented to analyze this further. But if you take, again, online banks of the likes that I mentioned, what's their business model? What's their revenue model? They have none. Well, they have one, which is open your current account, and maybe with the 1,000 euros you start depositing, eventually you will take out a loan, and then we can start making money. Or they make money on transaction fees in the back end. But I don't think that's long-term sustainable at scale. So many of them, not all of them, suffer from this today. And one of the illustrations of that is if you look at today's stock markets, fintechs, high-growth fintechs, those who did not, and for good reasons, focus on profitability, if they ever could, have lost 80% market value. Those who are mid-growth and somewhat profitable, or on the path to profitability fintechs, have lost 20%. So that's an illustration of how the market perceives currently fintechs. I tell you, as a result of this, fintechs have a real fighting chance nowadays. They have critical scale in terms of number of customers, for example, that they have onboarded over a relatively short period of time, which nobody would have believed, including myself, that they were capable of doing so. But that's where the Gen Z comes in, or the new generation comes in, because they don't care anymore having to go to an agency or being on the phone with a customer service call. They want to do it on the app. And they want to get these services increasingly delivered to them in a digital format. And that is where the banks really have to catch up towards on the customer end. But I do believe that the banks have a real opportunity already internally. And I say banks, asset managers, investment management firms. The internal side of their business is challenged. Their cost structure challenges them. It doesn't challenge the fintechs as much because they're digital first. But banks are not necessarily digital first or latest technology first. So implementing blockchain as one example, implementing AI tools into their internal processes could get them a long way. And I try to construct an example. I mean, I would still not give up personally on my trusted relationship with the trusted bank I have been banking with for years if I had the digital interface that I would expect nowadays and get from other service providers. But they have to clean up a little bit on the back end, on their KYC, on their AML processes, for example. These are all opportunities that traditional financial organizations have, and probably that make them stronger if they succeed that step of digitization, make them stronger relative to the fintechs because they have some core profitability already, which allows them not to be dependent on external money.
Yeah, and to your point, I recently did an interview with BNP Paribas, and the first thing is 5 years ago you heard this fight, you know, fintech were going to disrupt big banks. Now they meet and they work together. What I witnessed is that banks are inspired by the culture of those startups, going fast, going to market really fast, whereas they used to do a 5-year IT project. So I really think we're going to see a lot of most of consolidation with partnership, maybe acquisition in the future. And one thing which was said, which was so true, we can all buy a stock in one click today. We can all trade a crypto in one click today, but we cannot open an account in one click today. So the chain is like very good at the top, but very primitive at the beginning.
Maybe in the future the concept of a bank account won't exist anymore, but that's the long-term future. I don't think this is something in the next 10 years. Probably not something that I personally will, well, I will still see it. Whether I adopt it is a different question.
But the biggest headache you mentioned is KYC AML. This is the thing that nowadays you still need 5 days to fill the documentation. It might last weeks to complete. And if you go to another bank the day after, you start from scratch, which is completely insane. And maybe there, blockchain could help, because if all the documents were in the blockchain, you could share it with any bank at any time. let's switch to impact. So Laurent, first I would like to know now on the positive side, which is the impact of new technologies on the Luxembourg Stock Exchange activities?
Well, just maybe to link with what Hans-Jürgen was saying, last 3 years, we as a stock exchange have been investing a lot in several fintechs. We invest in one fintech based in London, Origin. That fintech is active in a pre-issuance process for debt securities. And now, based on their application, you can directly list your debt securities in one click from their application to the Luxembourg Stock Exchange. So it's a process that has been completely where we built on top of their technology, we integrate with their system to build our own solution that creates a huge improvement for the issuer that want to be listed in Luxembourg. That's one example, but it's not the only one. We also invest in one fintech based in Luxembourg, which is called Tetrao, that is active in AI, so basically extracting data from unstructured document. It's something that we need to do a lot. And it's already 2 years that we are working with them to build our own database with data that were previously either not captured, either captured manually, and that is giving us a lot of advantage in terms of sharing non-financial information, especially concerning ESG criteria, with the market, and the market is more and more looking after that kind of information. We also were at the basis of the launch of Funds DLT, which is and probably we will come back on that, which is able to do transfer of assets through the blockchain. That's probably the way that more and more fintech are indeed entering into the traditional company. I consider that the stock exchange is a traditional company, and that help us to change the way that we want to interact with our stakeholder, with our customer, with the investor or the issuer. Okay. 3 years ago, we also took the decision at the stock exchange to move all our infrastructure to the public cloud. We were the first major financial institution to take that decision. And it can sound like a technical project, but in fact, it's not. It's basically bringing connectivity, it's bringing agility, it's enhancing customer experience to the solution that we can provide. It's a huge technical project for sure, and it's really complex. And well, we should land in September, so I hope that everything will go fine and we will finalize that project. But after that, all our technical infrastructure will be in the cloud. It really helps to build faster new functionality for our customer. And I'm going to take one example, which is what we call the Lgx Data Hub, which is a database that basically investor can access to find non-financial information about securities. Basically, a project like that in the past would have taken probably 3 years or 2 years. So you need to define your requirement, and then we start to develop, and then the test starts, and then basically when your project go live, the initial requester is already looking for something else. So here it took us like 4 months. After 4 months, we were able to share the first information with the key stakeholders to get their feedback, to improve the solution. And of course, the project has been evolving during 1 year, but after 4 months, 5 months, we were already able to sell a solution to the people that were interested into that. And we are still improving the way that is doing, but it's completely changing also the interaction that we are having with what we call previously customer, and that now become more and more partners, in fact. So the new technology and all that shift, in fact, is pushing us to move from a traditional business model with provider, customer, to an ecosystem that you need to maintain, that you need to control, of course, but that will enrich all the possibilities that you can have to build faster new product and to be faster than the market. Today, everything is highly competitive. Just to give one example, the Lgx Data Hub, we have been, well, there has been a huge market infrastructure called NASDAQ that starts the same one that we have with less feature 6 months after us. And they are, I don't know, 10 times bigger. So the speed of acting is really important. And the technology that are available today can help a lot as long as you can manage those technology and make sure that you can get rid of your technological debt, which is often an issue in the financial sector.
And so, Thomas, if people want to stay up to date, they need to act on it. So how are your clients' needs evolving regarding all those new technologies?
Well, I'd say that globally they are growing, I mean, and for many reasons. Probably the first one is the fact that more and more of our clients recognize that the technology works as expected. It's not perfect, but it works as it was designed to work. They're also more and more conscious of the efficiency gains that they can get out of it. I mean, in this world, and whether we talk about crypto or tokenized asset, the simple fact that transaction is settlement, I mean, remove all the burden of reconciliation, and you know how much time and cost is spent in reconciliation and the risk of error that reconciliation are bringing. There's also the immediacy of the transaction, which free up capital. I mean, there's less of opportunity cost in terms of transferring value. So that's probably one first element. Then there's the development or the clarity in terms of regulatory framework, which certainly it's not crystal clear yet, but there's a lot of development, and it gives probably additional comfort to traditional players to operate in the space. That's for sure. Next to that, you have the competition element, because you got early movers. I mean, JP launched the JP coin years ago. Huh? They already sold the underlying technology to Consensus, and they get rid of it. And now Consensus is selling it, Squarum, selling to many players, including some Luxembourg players. So competition is also a key point. But in my opinion, the key point is the market demand. I mean, I think that from a customer standpoint, I think that Hans was mentioning that. We talk about millennials, Generation Z, Generation Alpha. Just to make a step back, one data point. I mean, it took 12 years between 2009 and 2021 to reach the cap of 100 million of crypto users. 12 years. It took less than 12 months to triple. So from January 21 to December 21, we tripled that amount to reach 300 millions. And okay, market is shitty at the moment. I mean, it's the same for everyone. Equity, bond, no, maybe not bond, but any tech stock is getting a hit. So what we see in the crypto space is slightly biased, but it's taking a hit as well. But the base scenario for the end of the year is that we keep the same level of growth than for 21, meaning that 300 millions by 3. So you're getting close from 1 billion crypto users. And at the end of the day, you might be the most conservative financial player. You might not like it. You might not understanding it. You cannot overlook a potential 1 billion client. So it forces them, traditional players, to make the step to maybe go beyond misconceptions, because there are many. Huh? This topic, internally we call it the trust paradox, because the underlying technology was meant to foster trust, but it's being held back by a trust issue. Because for I don't know what reason, well, no, for obvious reason, it has started a little bit shadow, and people have an anchor that blockchain means crypto means illicit transaction, which is, again, sorry, but it's pure bullshit. I mean, you read the report from Chainalysis, we were talking about AML, KYC, illicit transaction. If you read those reports, you realize that illicit transaction in crypto is 0.15% of transaction volume annually in the trillions.
Also hackable service providers.
Of course, but that's something, again, that's something different. So all clients, the needs of our clients are evolving. All of a sudden, they have demands from the very important publicly listed companies who are coming to us asking, I mean, how do we know to get to accept crypto as payment? Because our client is asking it. How do we know to start launching NFT collection? Because our client, or I mean, the communities around our projects is asking it. So it's evolving quickly, and now, I mean, that's not a topic of the day, but all the developments around the metaverse, which might be, I mean, the topic of a full session separately, it's augmenting that effect. Because for many traditional players, who probably do not even know that two of the main structural pillars of the metaverse is crypto and blockchain. Without that, you have a video game. But the fact that they can see something, it's I don't know, I mean, it makes them make the step more easier than before. And that we see, and it's the pace of growth is really significant. So that's
you see a big appetite from traditional players?
A significantly bigger appetite than 6-9 months ago.
Great. Hans-Jürgen, so I would like to know how your strategies have evolved. We talked before the panel about this investment you did in the Bank of London, for example, which is one of your first, I guess, massive investment in finance. Can you share with us if you are shifting towards some investments for the future of finance?
Well, the short answer is no, we will not be shifting. We will complementing our investment strategy with a select few, I guess, finance-related businesses. And the Bank of London is not the only one. We have others. I think what we shy away from, which we still will be, is B2C, bank-to-customer applications, because for many reasons, but one of which is they're taking an inordinate amount of money to grow. And as a very early stage fund with a finite pocket, these amounts of money are probably not commensurate to our investment strategy and the likely outcome, because it would be a high concentration of money. Just to give you an idea what that could mean, fintech, however it was defined, in 2008 in the world saw about $100 million of venture capital investment. In 2021, I just looked the number up because I was puzzled myself. In 2021, that number has grown over 1,000 times. 130 billion have been invested last year alone. And granted, it was a hype year. 130 billion have been invested last year into fintech businesses around the world. And the prognosis is that this will continue. Maybe not at the same pace, maybe there will be a dip. So this is there to stay, and investors will bank on it. We are a small, say, piece in this puzzle. I'd say today, I'm oversimplifying, but if you wanted to get into a promising fintech concept as an early stage investor, you will hardly be able to do so below a check size of $10 million at a start. And that is to get a not very meaningful stake in the company, potentially, if it's a really promising one. So the Bank of London was a counter-example, but why did we do this? First of all, what is the Bank of London? They may actually become a Luxembourg bank too, because they're right now applying or in the process of selecting the place in Europe that they will apply for a banking license. Clearing banking is one of the biggest hidden, say, movers of probably the biggest amounts of money that you can imagine, maybe outside of crypto in the future, who knows. So anyone, any company, any corporation that wants to transfer money internationally has to go through clearing banks. There's about 70, there's an expert in the room, but so please correct me if I'm wrong, but there's about 70 clearing banks in this world, 70, because it takes a special license. And this gentleman whom we met 4 years ago says, I want to become the first blockchain-based digital clearing bank because that system is so antiquated. And it's essentially a rip-off, pardon my French, among those 70 players in the world, because they're dominated. It's an oligopoly, and nobody can go by them or past them. So you can disrupt. And this was a concept that we were so excited about because it attacks a market dimension that is hidden. It's not very sexy, it's not app-driven, it's not consumer-driven, of course, but it's huge in volume, and even two decimals, two positions behind the decimal, change in commission or in efficiency can create a huge business, a true business, for a startup if they succeed. So they've gotten a license in the UK, that was their first one. Unconditional now, I may say, they're almost there. And will start trading, doing business at the end of this year. But this was a 4-year journey with a lot of belief, and there we did invest quite a significant amount of money as a first check size, because we believed so much in the idea. But until they got the license, it was no more than that. It was an idea. The validation will only come now. So it's for us as investors, it's still, first and foremost, the business model, the pain points that are being solved. Are these pain points real? Is the addressable market large? Among other criteria, as opposed to, is the technology hot, sexy, innovative? Technology in itself, for us, is an enabler. And blockchain or AI, machine learning, deep learning, all these buzzwords that you read in every single deck nowadays, investment proposal, they are a means to an end. And we're looking at the end and see whether that technology has a means within that ecosystem. And of course, today's data analytics, data management tools are 100 times more powerful than they were probably even 5 years ago. So they all have a role to play, but they're playing pretty much every business that at least we look at. We have examples for AI in supermarket self-scanning applications, for example. We have AI in health applications with K-Health. And of course, there's AI in financial applications, certainly like the Bank of London. So for us, it's more the speed with which, and you mentioned it earlier on, Laurent, the speed with which you can develop and deploy new technology is unparalleled compared to 10 years ago. And that makes for real, like gives businesses or business models new perspectives as to how quickly they can go to market in the first place, and how impactful they can be for their customers, whoever those customers are.
Maybe a fun fact before we go to the future. What was the valuation of the Bank of London after they got the license granted?
You want me? Yeah. Anthony, I'm not sure. Anthony is the CEO. I'm not sure I can disclose much of that, but I think that one I can disclose. So it was $1 billion valuation. From where we invested, which was a fraction of that. But that's the game. It could, this could have worked on a toss of a coin as well. It could not have worked out, and then okay, all you have is lose $5 million. That was your first check size. Now this could become very meaningful, albeit it takes a lot of money now to bring it to market.
Yeah, my point is just to see how startups and VCs and everything come together to create the future winners of this economy. So time is flying, so let's wrap up with a view which will be also acting as a conclusion. I would like you to share your vision for the future. So maybe I stay with Hans-Jürgen, for example. If you can wrap up in 2 minutes, how do you see the future of finance from a venture capitalist perspective?
If I had a big bet or big bets on a large portfolio in finance, I would have probably developed a very articulate thesis about this. Since I'm a lot more generalist and diversified, I was a little less prepared for that question. I think generally the future of finance is very bright. It's, after all, one of the biggest industries in this world. It is there to stay in whatever shape or form it will evolve. So whoever invests into this will, and smartly, will reap big benefits. I am absolutely convinced of that. The challenge that still many investments have, and don't distinguish anyone in particular or single out anyone in particular, is that they still have to demonstrate that they can become profitable businesses if they want to. There's nothing wrong with fueling growth, but you have to show that structurally you can become a business, and that's still where the challenge is in finance. But if you ask me, where would I see finance in 10 years? It would be very much blockchain based. I'm convinced of that. It'll be a lot more immediate in terms of transaction speed. It will be a lot more frictionless in terms of transaction processing. And from a consumer perspective, it will be all on my phone. Everything, including KYC, hopefully.
And Laurent, from your side, if Luxembourg wants to make the best of those evolution, which challenges do you think it has to overcome right now?
Great question, and challenge after the future. Next time we should probably switch it. Now, more seriously, for me there is several challenges. One is that Luxembourg is still lagging behind. If you compare the country, the level of digitalization, think about digitalization as make the life of everyone easier. Compare with what's happening in Norway, in Lithuania, Lithuania. They are far in advance on where we are. There is a lot of process that we still need to simplify, to automatize, to digitalize, in fact, in Luxembourg. The challenge that, to be honest, is for me today the one that is making me the most afraid is talent retention, talent attraction. Since after the COVID, basically finding people to work on IT, but not only on IT, but my job is in IT, but on risk management, on compliance, even in a restaurant or whatever. I mean, Luxembourg, the model of Luxembourg, and if you think now the difficulty is just to take a train for today, for instance, you work 40 hours, you spend minimum 10 hours in your car if you want to commute for a salary that is not so much different that what you can get in France or in Belgium or in Germany now. So I strongly believe that Luxembourg need to think about that. The talent, there is not enough talent in the country, so you need to be able to attract them. From a technology point of view, you need also to be able probably to look into the gender gap. Today, in my team, I think we have 85% of the people are male. Well, if we need to attract talent, we need to be able to attract all of them, and to be inclusive in terms of talent attraction and retention. I still will name one because I don't have a lot of time. For me, one of the challenge, and it's important for us as a stock exchange, is bridging digitalization with sustainability. Today there is still a lot, and if we talk also about the blockchain, there is still a lot of talk about the way that is the technology green? Is the technology not green? Is it too much CO2 emission? I strongly believe that digitalization can help to the net zero target that we have. And for me, it's not a coincidence if the European Commission has made the green and the digital transition as their overachieving priority. Look how much CO2 emission you can save with the usage of video conference. Of course, video conference is producing CO2, but it saves tons of CO2 with plane traveling all the way around. So you really need to take the best out of that and to be able to build that and to help building that net zero transition with for me the huge help of the digitalization that's going to come in the future.
And maybe one question regarding the human resources issue. We talked recently with Ansirgun about Wix, which is an Israeli company, and now they grew to 6,000 people, which means in Tel Aviv, where they are, very quickly they run out of talent, and they opened an office, in Estonia, in Ukraine, in companies.
Well, it was in Ukraine in the first place. 1,000 people in Ukraine that had to be evacuated at the beginning of the crisis, but that's just an anecdote, since you mentioned it.
In terms of this challenge of staff, do you imagine also maybe having people working for the Luxembourg Stock Exchange without being located in Luxembourg?
I can imagine any kind of solution, to be honest. But today, the legal framework that is built here in Luxembourg does not help in that kind of. The legal framework that is built in Europe, because it's not a Luxembourgish issue, it's probably a European issue, does not help in that kind of solution. You know what it is for finance sector to have people working from outside. There is plenty of limitation that you need to do. Then there is all the stable company law that you need to be careful. Well, basically, it's complex, and it's complex. I guess if you have like 5,000 people, it's probably more easy to do, right? But for mid-size company in Luxembourg, which is small-size company in the world, the solutions are much more complex to build within the framework that is being built today.
And we are publishing this week the new edition of NDA Luxembourg, and you will see that this is impacting every possible company in Luxembourg right now. It's a huge issue.
I'm curious because I haven't encountered that issue yet. But some of my startups, this is the ongoing debate right now, post-COVID. What are we going to become? A remote first, a partially on-site, or fully back to office? A whole nother debate. But there's some companies who swear that remote first will work. Would you say that, and of course this is particularly to get IT resources, which are scarce in certain areas. Luxembourg will be one, Edinburgh will be another one. I just had that conversation yesterday with one of my founders. He says, I have no choice. I have to hire people in London, in Dublin, and wherever else in the world they want to work from, at least IT resources, because otherwise I wouldn't get them. Are you saying that that would not be possible in Luxembourg?
It's much more complex in Luxembourg today because, there is a law to protect the data, especially in the financial sector.
Oh, yeah.
It's not that easy to do in that way.
I get that. So it's indirectly through the location of data issue, which I would add one, which I think is relevant and probably a challenge for Luxembourg. And that is around innovation again, and whether it's fintech or anything else, but here specifically fintech. I think London and probably other places. Let me start differently. Innovation is about trial and error, so you don't get it right in the first place. And that's the concern, obviously, from every regulator's and legislator's perspective. Can you allow young people, young companies that may not be young people, to come out with a product or a service that would potentially harm in the first place because it wasn't perfect, right? Well, there's some countries who have used this or looked at this as an opportunity and say, okay, we understand the risks, we build a sandbox, we put them in there. That was, in this case, the regulatory sandbox in the financial services, and say, try it, play around. If it works, we help you figure it out. If it doesn't work, it doesn't spill over, you don't harm anyone, but we have a collaboration to make it work. That was apparently not the approach that has been taken in Luxembourg, which makes it a lot harder for innovation, at least in the financial services, to really get to a point quickly where they, A, have a working solution or product, and B, where this is fully embraced by the ecosystem, including the regulatory one. So I think that's, again, we had that conversation at the Haut Comité and in other places, that the sandbox concept would have been interesting. I don't know for what reason it hasn't been adopted, but that's just another example of a challenge.
And maybe the COVID impact will help. And we saw how suddenly you bought, I guess, hundreds of computers to get people to work from home. So maybe everything is moving, but of course at a regulatory pace. To conclude, Thomas, which risks and opportunities do you identify for the future?
Well, I will start with opportunities very briefly and sticking to the different pillars that I was mentioning earlier, and without spamming you with too many figures. I mean, so banking and DeFi nowadays. I mean, we're oscillating between 40, 50, and 120 billion in total value locked, as we call it. So the amount of money which is stuck somehow deposited in DeFi protocols, which is a rounding errors, if we make a step back. Crypto asset management. So, I mean, where we were around 2.5 trillions of global market cap in the crypto space, less than 5% of all of that was professionally managed. So this gives you an idea of the potential. Tokenization, assets tokenization, the very few study that we have expect that between 5 and 7 years, most of the financial instrument would be tokenized. So we're talking about trillions again. And the same for the metaverse. Obviously, I think it's fair to say that we have very limited visibility on what the potential of the metaverse will be. But reports from JP, Goldman, Citi, they're all leading to trillions, between 8, 15 trillions. So it's massive. I mean, bottom line, it's massive. Now, focusing on the risks, I think that, and I have quite strong position on that, I think that the main risk is to be left behind. I mean, it's all about relevance. In Europe, and Lux in particular, I mean, can you imagine that the first euro stablecoin has been launched a few weeks ago by Circle with euro reserve in the US? I mean, this is insane. So we have the first euro stablecoin based in the US with euro reserve in US banks. I mean, I don't understand that. And while we have that, we have, I mean, deputies working on MiCA to make sure that it's regulating the space. But I think we should probably switch a bit the angle and to look a little bit more on what are the opportunities and how we can handle it separately, rather than trying to just to keep it under the carpet. Because other countries are working and they are developing very, very, very quickly.
So back to the point of Hans-Jürgen of the risk appetite. In such a fast growing industry, you need to accept there's going to be damage on the way, otherwise you get too slow.
Yeah, and by the way, just briefly, we were talking about transferring money across the world, clearing and so on. You know that anyone in Colombia today can use USDC to transfer money to Hong Kong in 30 sec at no cost. It's existing already.
Perfect. Well, gentlemen, thank you very much for your time. I suggest we conclude here because we have the continuation of the event just outside. So feel free to ask your questions directly to them just outside. Follow me for the next part. Thank you very much.
Thank you.